Morning, everybody. Today is Tuesday, February 24th. Welcome to the pre-market analysis, QOL Trading. If you're new to the channel, subscribe to the channel. Hit that bell over there for future notifications on videos that I make. And then hit that thumbs up button, like this video. Go down into the description area and join our Discord community or live trading from 9:30 a.m. to 11 a.m. Eastern time, where I go over some basic trade strategies along with some other advanced strategies as well. That's currently, that is for free till the end of the month. And then I'm going to figure out how else we're going to have that station for everybody. So getting into it right now, data here right now. We have some Fed speaks right now, but we don't have the market killer Powell speaking, so that's good. Or Besson, he's not speaking either, so that's something good. However, what do we got at 9 o'clock? Consumer confidence, that may do a little something to the market. So if you're into the marketplace, so 10 o'clock Eastern time. So if you're in the market, be careful. You do have some red folders here. Richmond Manufacturing Index, that could move the market there. And then more Fed speak in the afternoon. I don't anticipate any movement there. You do have State of the Union this evening with President Trump. That'll probably go on for 48 hours based on the way he likes to speak. So he'll probably still be speaking tomorrow morning the way he likes to do it. Home Depot reported pre-market today, and that they said their sales had growth first time in 3 years. Considering everything that's going on with the housing market, I think that was a good uptick there. Also, AMD cut a deal with Meta, which sent, and I'm not sure what the details were on the deal. However, AMD is currently up $19 pre-market right now. So we'll see if that gives a little boost to the marketplace. So let's get right into it right now. But actually, before we do that, let's get into the rest of the earnings we have this week. So we went over Home Depot right now. After the close today, Hewlett-Packard, I don't see anything much there. Big thing is going to be State of the Union today, tonight rather, and then tomorrow you're going to have NVIDIA, Salesforce, Snowflake. Actually, Snowflake was kind of getting beaten down yesterday. Actually, everything was getting beaten down. So, but especially I saw Snowflake. But NVIDIA, everybody's waiting for NVIDIA. NVIDIA, though, with the overall market being soft yesterday, NVIDIA was kind of holding its own. So maybe it was just with anticipation of the earnings call for tomorrow, but that doesn't necessarily mean anything. So don't read too much into that. So let's get into the broader markets and the futures here. Still in this little chop zone here, so we still have to get over these certain levels in order to, find a direction one way or the other. I would say same thing. You have to get over 680, 68, 87, 80 in order to push higher into that 68, 97, 75 level. Again, you still have your 20 and the 50-day SMA sitting right on top of each other at 69, 23, 64, and 69, 30, 70 respectively. If you can get above that, I think you can push to October's monthly high at 7,014, which is also the previous all-time high before you made those all-time highs at 7,043. It's the same thing as yesterday. Numbers haven't really changed. You can see we're chopping around in this channel here. But I will just repeat it for those of you that are new to the channel here. 68.41. You're going to have to hold that. That is February 18th low. And let me not fix that because I don't like the way that looks there. So, okay. All right, that's done. If you lose February 18th low at 68.41, probably you're going to come down and probably test yesterday's lows at 68.32, and below that you have January monthly low at 68.14.5. Below that, February 13th low at 68.0175. If you lose that, you have 67.71.5, and that's December's monthly low. So I think that these are key levels right now. I think that you're going to need to hold yesterday's lows. If you lose yesterday's lows, I think 67.71.5 could be in target there. And then also below that, you have some support down there at February's monthly low. It's 67.51.5. But I don't see any data coming out right now. However, there is a lot of geopolitical turbulence that it's happening out there right now between what's happening in Mexico, and then you have our ships real close to Iran with the potential bombing of Iran again. So there's a lot of geopolitical tension happening out there that between that and the tariffs. So I think that this is a reason why we're doing this chop around fest right now, because there is no direction right now, because especially I think FedEx came out with the first lawsuit yesterday against the administration trying to get their refunds based on the tariffs. So I think that's just the beginning of the nonsense that's ahead of us here. So let's get into the SPYs. The SPY is going to be the very, very similar chart. Look, the way the charts look here. Below the 50, below the 20, the 50 on the SPY is sitting at 687.48. The 20 is 688.78. And then on the downside here, 680.37 is a good level of support. It's sitting right at the sitting right here at this lower end regressional trend line that I have here from June of 2025. And it's also sitting at the low from February 12th low at 680.37. Below that, you have the February 13th low at 677.52. You have to hold that. Below that, you have February's low of 675.79. But I just think we're going to just be in this choppy zone until we're going to get some movements based on the tariffs. And we could be here for a little bit right now. So I would not be hanging on to trades long. So you could see same thing, very choppy here. We're on the NASDAQ right now. Same thing on the NASDAQ. I think you're lying in the sand on the NASDAQ. On the upside is this January monthly low. It's at 25,025. If you want to get upside, you're going to have to regain that monthly low there. And then on the downside, you need to hold this 24,670.75, which was yesterday's low. Actually, excuse me, this is February 16th low. It actually comes in line with yesterday's low also. So you want to hold that. If you lose that, you have 24,581.31, and that's February 13th low. Below that, if you lose that, you come down to 24,495, which is August of 2025 monthly high. I would suspect you get a little support down there. So that's pretty much it on the NASDAQ. If you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. So it's going to be a similar chart here on the Qs. The Qs here, you can see we're kind of struggling here. February 17th high at 603.95 in pre-market here. So I think upside for just in the beginning part of the market. If you regain this, you can push to get some upside. But the line in the sand is going to be that January monthly high. January monthly low at 607.05. And actually before that, you're going to have that monthly high of, that February 13th high of 606.48. So in order for us to really push higher, you're going to have to regain and hold that January 26th monthly low at 607.05, and then get above yesterday's high at 608.01 in order to push into the February 20th high at 610.12, and then you're going to have this lower end regressional trend line, which you're going to have some resistance here. It's sitting at 611.36. Downside, if you lose yesterday's low at 599.05, I think you come down I think you're going to come down to February's low at 594.76. If you lose 594.76, 590.36 is my next level, which is October's monthly low, which I think you can come down to pretty rapidly there. And then below that, I think you're going to come down here to the 200-day SMA, sitting at 584.29. So I think if there's some nasty news that comes out, I think that gets hit pretty quickly, though. So let's get into Tesla. If you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video here. So let's go to Tesla. Yesterday, I thought we would hold this regressional trend line here from the high of the all-time highs set from December 25th. So we lost that level. So now that level is now going to be a resistance level. So if we do get a pop this morning, and we get a pop up here into this 403.90, I'd be looking to sell short that, and use this as a resistance level. And then, of course, if you do regain this level, this will be your support level. But right now, with as weak as Tesla is, I would say that if you do get a pop into that level, I think that would be a good level to maybe pop and fade it. I do have some other levels in there. I mean, there's a bunch of levels here that Tesla's going to have to get through in order to continue to get not continue, but in order to get some upside. However, this did create a nice little speed zone here from yesterday. So this line that I had, this level that I have here, which was it's the first low of the day. And the reason why I have this here, so the market came down here, it was the low of the day, and then it started moving higher. That becomes a level. And then when we lose that level, and now it's a break and retest. So now if we come back up to this level, I like this level for the first level of resistance. So if we do pop up to this 401.99, this is a level I'm going to be looking at in the market. When the market opens up, I'd be looking to take a short here and maybe and hopefully just see how the market reacts here. Take a short there. If it does pop through strong here, my next ideal level to take a short is this I would say this 404.11, which is February 19th low. That's another ideal break and retest low. So my bias today on Tesla, it's definitely been weak, but we do know the way Tesla runs. Tesla has these big sellouts and then it just gobbles it right back up. But on the downside with Tesla, what I'd like to see on Tesla, we have these open point of control levels. For those of you that are new to the channel, I draw these open point of controls, and they're automatically drawn on my chart. And as a matter of fact, now that I plotted one here, we have one that was created yesterday. So here's a point of control that was created yesterday. And I'm going to plot that down here. So I mark it as a yellow. So this point of control here, this line right here, it shows where the heavy volume was traded at a particular time here. And so there was a lot of volume that was traded at the end of the day. It was 5.5 million shares. And so it automatically calculates a average price on where that volume was traded here. So 395 is a point of control here. So now it created a point of control. So I'm anticipating if we do get a pop, market comes down and touches this level, that would be a level of support. Now, however, now the same thing happens. We have these open point of controls. Now I'll leave this level open. Now, why is it open? Because it created this point of control, and I'll leave it open until the market comes back and touches that point of control. When it hits that point of control, I'll then take it off of my charts. Okay. So, as a matter of fact, looking at this, oh no, that's that here. So you could see here, this is a point of control, but then in aftermarket, it was all over it. So that's not a point of control that I would leave up here. Here, you could see the point of control was created, but here in aftermarket and even post-market and even pre-market, it did not touch that level yet. So I leave it open, right? So, we still are 45 minutes away from the open. So this could very well, the market could pull back before the market even opens. And I'll end up taking this level off of my charts before the market even opens, because we are still, we're only a couple dollars away. So this could, a minute before the market opens, this can come down and hit, and I'll take this off the charts. But this is the concept of the point of control levels that I leave open. So I'm hoping that, if the market keeps pushing up right now, I'm happy with that, because this will create another point of control level that's open. And I leave it open until the market comes back and touches that level. So that being said, and sometimes it doesn't do it the same day. Sometimes it's up here for months. We had an open point of control level open last year at $416 a share, and the market pulled all the way back to $200, and it didn't get hit until 9 months later. And so now here's a perfect example. We have open point of controls down below that have been open. Here's a point of control here from September 11th at 365.90. That's still open. And then even below that, we have a point of control that's open at 333.78. And that was from September 4th. So when those levels get hit, that's going to make me feel real good that we're getting close to the bottom with Tesla right now. I think we're getting close right now, but I think due to everything that's happening out there, I think that there's still some more downside left, but I think we're getting close. I think that the numbers that I'm hearing right now, there's a line in the sand here with Tesla right now that it's going to need to hold in order for us, or we're going to get some down, big downside here. So this line in the sand here on Tesla, if we lose this 382.84, we're going to quickly come down here to 365 because I do not see a lot of support there until we get to that 365 level. And how do I see that? And I'll show you how I came up with that right now. That 382, where are you there? So it's right in here. I know this looks a little noisy, but I'll try to clean it up for everybody here. So let me see if I can go to a cleaner chart here. I'll clean. This looks a little better here. So right in here, this level right here, this 382, there is nothing. There is nothing holding this, nothing supporting it. Right in here, this 382 level, you can see there's nothing in here that's supporting it if we lose that level. So if Tesla does, get some, push down here and we lose that 382.78, I see nothing supporting it in here till we get to that 366.07 level, right? And then, and then that's where you start to see a little support coming in. And then that 333 level, I don't have it on this chart here, but that 333 level would probably be the next level that I see here. Actually, I think I see it right in there. But that's the next level that I would see at that level for support on Tesla down there. So that 382 level is a key level. 387 is going to be the first line in the sand, but this is your last line of support right here. So you're going to want to make sure that if you are down there and if we lose that level, this is going to be quickly move down here to 365. So hopefully Tesla holds up all these levels right now. You do have some support down here. There's a monthly high at 394. It did hold it yesterday, so we'll see. I bet you there's a good chance that we test it again. Maybe not today, but at some point this week, there's a good chance that gets tested right now. So you can see what I have up here. I have all these different lows up here, and they're real tight. So now I'll leave them up here right now today, and I'll see where is the best reaction. If I get a level that's not a great reaction, like for example, this level that I have here, this 397.75, I'm looking at it right now. It's not giving me a great reaction. Whereas you can see this low right here, this 399.18 level, this is looking pretty good here. I like this level so far. Same thing with this 451 level. There's giving me nice resistance off of that. So I'm going to probably leave that level there. And then I'm going to take this level off because it doesn't really look like it's that much of a level. So that's how I draw my levels. It's kind of like just put it up here and just see how, I use the previous lows. I'll use a low of the move, a structure of the move. And then it's just kind of trial and error and see how it happens. So like yesterday, this is an ideal level right here. So this was like a low, the first low of the day, right here. First low of the day, we popped off of that low. And then right here, when we lost it, that's what you call a break in structure, right? So that's why I have that up here. So if we do get a pop up here today into this 401.99, I like that as a level of resistance to take another short there, okay? So let's go into what I'm going to have up there for today. So the options that I'm going to have up here for today, I'm going to start with the 405 calls, which expire tomorrow because we have 3 expiration dates, Monday, Wednesday, and Friday now. And then I'm going to have the 390 puts. So I got a little space. I got 2 days to play with these. So they closed the 405 calls. They closed at $3.20, and the 390 puts they closed at $2.34. So those of you that are on the channel regularly, you know that I like to have premiums at least $3 because then it moves in increments of 5 cents per move versus if it's below $3, it moves in pennies, right? So it's a bigger bang for the buck. So if I'm buying a 5 lot and it moves 5 cents, I can make $25 versus if I buy a 5 lot and it's below $3, I can only make $5, right? So that's the whole concept there. So, and then the basic trade that we go over in our trade room is the 5-minute opening range trade, right? So here's another script that I have on my charts here. This green line here, it starts to generate the first 5 minutes of the day. And then after the first 5 minutes is done generating, this stays permanent on my charts for the day. Not only for the day, but for the previous days, and I can go further back and I could do my back testing and I could see how the market reacts certain times when it's the best time to get in trades, and then do my data, right? So let's go over yesterday's data. Yesterday was a clean 5-minute break again. And if you come into the trading room, go down in the more area where it says the word more, into the description area, join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. And this is free right now until the end of the month. So take advantage. So we go over this strategy here, and this is the base strategy. This is where we start. And then everything else I build off of this base strategy right here. So I don't make a trade. Sometimes I'll make a trade at the beginning. If I see a nice move into like a previous day close, I see the market reacting there, sometimes I'll take a trade before the first 5 minutes is formed. But most of the time I'm waiting for this 5 minute to form. Why? Because in the first 5 minutes, that's when the heaviest volume is formed. And then when you break one way or the other, so if the market breaks the first 5 minutes, so yesterday's range, you had a high of 407.70 and a low of 404.45. Once it broke that 404.45, you could take a short, right? And so when you take that short, you're taking a short. And the way I take my shorts, I buy puts. So up top here, I buy calls. So if I think the market's going up, I'm buying calls up here. And if I think the market's going lower, I buy puts over here. So I never sell short. I never sell short my options. And I never sell short calls. I never sell short puts, right? So I'm always, if I think the market's going down, I'm going long puts. If I think the market's going up, I'm going long calls, okay? So yesterday, if you took the short here, once it broke the 404.45, you could have gotten yourself a good $10 out of that move. And so how does that translate into the options? The way it translates into the options is, for every dollar the equity moves, the option premium price usually moves about 35-40 cents. So for argument's sake, let's call it 50 cents. So for every dollar it moves, so if it moved $10 yesterday and you bought it at 234 on the break, call it, you would have made $5. So if you bought a one lot here, you would have made $500. So you could just, for argument's sake, say that if you bought at 234 and you took it all the way down to 394, which would be, incredible discipline to do something like that. I'm just trying to give you an example. This premium price would, be right around from 234. It would have rallied all the way up, to about 734. Okay, and then if you bought a one lot, that's $500. And so if you increase your increments on your lot size, if you bought a two lot, that's $1,000, right? And that's a basic trade. And these are things that we go over all the time in the trading room. So if you have anything you want me to cover other than Tesla, I pretty much do a rinse and repeat. I keep it simple. Many years ago when I first started trading, I was trading 10 different things and recognized that you don't need to trade 10 different things. And Tesla has the most liquid options that you can trade. So you don't need any other vehicles. Just master one thing and then you can move on to other things. So my trade strategy, though, you can apply it to every equity. You can apply it to futures. You can apply it to crypto. So come on in and learn. But if there's other equities you want me to cover, any of the Mag 7, I don't do any penny stocks, though. I only do stocks that have a decent market cap and that are making money. Leave a comment down below. I'll be glad to cover that. Again, if you're new to the channel here, subscribe to the channel, hit that thumbs up button, like this video, and then also go down in the description, join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. I hope to see everybody in the trading room today. If not, I will see everybody tomorrow morning at 8:30 a.m. Eastern time for pre-market analysis. Have a great trading day, everybody, and I will see you tomorrow.